Hey Wealth Builders! Welcome back to another episode of The Bemused. My name is Mishak.
And I'm Akiva.
And on this channel, we talk about all things personal finance for young adults just like you and us.
To get into that kind of stuff, go on ahead and hit that big red subscribe button. And while you're at it, click that notification bell so you never miss when we post new valuable videos just like this one right here.
And in this video, we're going to be giving you guys 5 tax tips that we think will be very helpful for entrepreneurs. So entrepreneurship, it is a fun and sometimes scary journey. And tax responsibilities for solopreneurs or other business owners can look very different. So if you are a business owner, here are 5 things that you should know about taxes. So the first thing is self-employment tax. So as a solopreneur or business owner, you are responsible for paying 12.4% towards Social Security. So what you want to do is make sure that you put aside 12.4% of your net income, not your gross, but your net, and keep this to pay your Social Security taxes to the government. So the next thing is Medicare, and this is 2.9%. So you want to make sure that you are withholding 2.9% of your net income, not your gross, to pay to the government for Medicare taxes. And together, these 2 items make up self-employment tax.
The second thing you're going to want to know about is estimated tax payments. So if you're an employee, you're probably used to having income taxes withheld from your paychecks. However, as a solopreneur and new business owner, that is not the case. You have to put aside money for your own federal and state income taxes. So if you don't have taxes withheld through withholding or any other means, you might have to pay what's known as estimated taxes. Now, estimated tax payments are due 4 times per year, once per quarter generally. And those dates are April 15th for the first quarter, June 15th for the second, September 15th for the third quarter of the year, and then January 15th of the following year for the fourth quarter. So a good rule of thumb is just to calculate your net profit at the end of each quarter of the year and put aside a certain percentage to pay your estimated tax payments. Based, of course, on how much money you've made, your tax rate is going to be different.
The third item is employment tax. So if your business has employees, you will be responsible for the following: Social Security and Medicare tax. So the only difference here is that you will actually be paying slightly less, exactly half of each of these. So for Social Security, you'll be responsible for 6.2%, and for Medicare, you'll be responsible for 1.45%. And the reason for that is your employee would actually be paying their portion or their half, and you would be withholding that from their check and then adding to that your half and then paying that to the government. So hopefully that made sense, because I know I can be a little wordy. The second thing that you'll be responsible for is federal income tax withholding. So you're probably familiar with federal income tax. As the employer, it is your responsibility to withhold these funds from your employees' paychecks and make sure that they are paid at the appropriate times and to the appropriate government agencies. And the third thing is federal unemployment tax. This is also referred to as FUTA. I don't think anyone calls it that. So the federal unemployment tax is a tax paid by the employer based on the employee's wages. So this tax is 6% up to $7,000 of the employee's wages. And any wages above $7,000 are not taxable. This tax funds the federal government's oversight of unemployment in all 50 states. In practice, the actual percent paid is generally 0.6%. If you pay your SUTA on time, which is your state's unemployment tax, you are eligible for a federal unemployment tax credit. And that credit is up to 5.4% if you pay on time, meaning that your liability would be 0.6%. Payments for each quarter are due on the last day of the month following quarter end. For example, payments for January through March are due on April 30th.
The fourth thing you're going to want to know all about is sales taxes. So 45 states and Washington, D.C. have sales tax. And states use this money to pay for budgeted items like public safety, schools, and roads. I'm sure most of us are familiar with paying sales tax at some point in our life, but just remember that when the shoe is on the other foot as a business owner, you are responsible for collecting and therefore paying that sales tax that you collect from your customers. So businesses that sell products or a taxable service, not all services are taxable, but those who sell a taxable service must collect taxes from their customers and remit them to your local government. So now, how do you collect, report, and pay these sales taxes? First, determine whether your product or service is subject to sales taxes. And if it is, you're going to want to register for a sales tax permit in that state. Then you have to calculate the sales tax that you must charge. Of course, this sales tax rate is going to vary. If you do business in multiple states or you're shipping products out to customers in multiple states, you're going to want to know the rules for each state that you are doing business in. Then you collect the sales tax at your point of sale or checkout. Then finally, you send your sales tax return and associated payments to the state. Now, this sounds like a lot of confusing steps, but the good news is that if you're using popular point of sale software, like if you are doing services through things like Shopify or Etsy, for example, these softwares really takes a lot of the headache out of your sales tax collection and reporting. Most of these services will automatically calculate and charge that sales tax and collect it from your customers. However, with most of them, you still are on the hook for actually sending that money to the state and filing the necessary forms. And the fifth and final thing you're going to want to know with regards to taxes is about excise tax. So if your business happens to be in a special industry like communications or transportation, you might be subject to paying excise tax. So many of us, if you've ever taken a really close look at, say, your cell phone bill or something like that, you will see all these little taxes and fees that are marked in there, and a lot of those are excise taxes. Like I said, these are specifically for certain types of businesses that have these special additional types of taxes associated.
So thank you so much for watching. What we'd like for you to do, if this video was valuable to you, is comment down below the word value. And of course, share this video with any friends that are business owners, entrepreneurs, solopreneurs, whatever type of classification they are. Pass it along so that they can also learn about these 5 tips that we are sharing here today. Don't forget to subscribe and hit the notification bell so you never miss when we post new content just like this. And we'll see you in the next one. Bye. We'd like for you to comment down below value. If this comment
like the word values, like specifically now.
So thank you so much for watching. And of course, share this video with any friends that are business owners, entrepreneurs, solopreneurs, whatever.